Hello, everyone. Welcome to today's webinar. Our topic today is checklist of items to close a loan. My name is Andrew Seeker. I'm the founder and CEO of Anchor CREI Capital, and I've been doing commercial loan origination for the past decade and have closed a little over $6.4 million worth of loans during that time, mostly multifamily, but also did an office, a light industrial, and worked with some mobile home park owners, just to name a few. And I'll let Janina introduce herself very quickly here. Go ahead.
Hey, everybody. Again, my name is Janina. I'm an account executive with a private lender in Texas. And my company has done a little over 600 million since it was founded in 2016. And I've done a little over 6 million over the past few months. But yeah, I'm very excited to be here and with Andrew and discuss, some important topics.
Okay, very good. Yeah, before we get going here too, just a couple house cleaning items here. We just want to ask that you please consult any professional CPA or attorney if you have any questions. We try to present the truth and nothing but the truth, but in this world of litigation that we live in, especially here in the United States, and with rules and things always changing, please consult a professional before taking any steps forward. Okay. We will also record this. This is being recorded. If you don't want to be seen on the camera, then just go ahead and log off and watch the replay. And we'll post this here probably later today on LinkedIn and some other groups. Okay, so let's go ahead and roll through. Why do you care about what items will be requested for your loan? This is a question that a lot of borrowers have asked us. And one of the first things we want to reply with is that it helps with expectations. It's better to know what will be expected, especially for you as the borrower. And this is also to protect you as well, because you could say, well, I did send the lender this document or this statement. This is what they had. If they commit mortgage fraud, if the lender does that, they rip you off. You could say, well, I did provide the lender with my driver's license and my bank statements. And of course, you're going to keep records of all this too. You have all this in your folder on your computer. So if you ever have to go to the SEC or whoever, was it the Consumer Protection Bureau? Was it CPBS or something like that? There's an organization that helps consumers too that have been ripped off. You can always submit your documents to them and tell them and explain what happened. And so it's also for your protection too, not just for ours. I'll let Janina explain the next one, please.
Yeah, so next is just so that you can make sure that this is in fact the right loan for you. If you say, for instance, I had someone that they didn't have a bank account, they put all their money under their mattress, and it's not necessary that we can never lend to them, but knowing this up front, I can make sure that I give the right advice and we can kind of set you up for success. And there are certain requirements for certain loans, so to make sure that you in fact have the right loan for you. And a lot of times, like I said, there's other options that you can take to make sure that you can still get where you want to be at.
Okay, very good. And then the last one there is faster closing. So how many of you would like to close a loan in 90 days, right? So if you want to raise your hand, go ahead. But see, nobody does, right? We want to close. Most borrowers want to close their loans yesterday, right? You found a good property and you want to just be over and done with and start making money, right? So obviously, the faster you have your documents put together and submitted to us, and the more accurate they are. That's another thing I want to really harp on is accuracy. And also, what do you call it? What's the word I'm looking for? Recency, right? You want all your documents to be current. You don't want to send appraisals or inspections that were done 3 years ago on the property. And also, as I'll mention here in a few minutes, your rent roll. If you're buying a multifamily property, you want to make sure that you have current rents and occupancy information for all the units, not just, nothing from last year. Okay, we're already what, March? We're already 3 months, 2.5 months into the new year, into 2023. So you don't want to accept anything dated December, 31 of 2022. You want everything up to like March 1st, at least March 1st, if not March, what is today, the 8th, right?
Yeah.
So you want to have everything current, and it gets us to faster closings. All right, that's let's move on to the different types of loans. So Janina, would you mind explaining
Yeah.
this to us, please?
Yeah, before we go over the checklist, just to give a brief explanation of the different type of loans and kind of why different documents are needed for different specific loans. But the first one is our bridge loans, and this is a common verbiage used from lenders across the U.S., but it's just a short-term loan to help you actually acquire the property. A lot of people think it's only if rehab or renovations are needed, but it can be also a stabilized property. Again, it's to help you acquire that, and then if you do need funds for renovations or rehab, that can be included. The next one is ground up construction. And these are structured a lot of times just like the bridge loan. It's kind of a separate category, under that. But just to give a little more detail, most lenders can provide funds for the land, plus for us at least, the vertical construction. Right now, there's not many lenders that will help with actually developing the land. But I know with me directly, you can help you acquire the land and provide funds even if you own it already, to kind of cash out on that part, and then again the vertical construction costs. And
Okay.
then
Yeah, I was going
lastly,
to say that's a good thing to know too, because I have had clients in the past that had struggled to get financing from lenders on the land portion.
yeah,
There were a few lenders out there that were real sticklers on that. They said you have to own the land, or at least be responsible for any payments that you're making on the land, the raw ground itself.
yeah,
They only wanted to do the construction part. So, but I know that Janina and her company, you do assist with the purchase of the land as well, correct?
that's
Okay.
right. Yeah.
Okay. All right.
Okay. And lastly, has a couple different names for it, but most commonly it's a DSCR or 30-year loan or long-term rental loan. And this is a fixed rate loan that allows you to purchase and hold the property over a 30-year term. And if you own the property already, you can always look at refinancing it or cashing out on it as well. And again, this is, more set up opposite of the bridge loan. It's, long term.
Okay. Very good. Let's go on to the items that are required to close a loan. Okay, so as you can see here, it says completed application, borrower's agreement, loan term sheet, which the lenders provide. So here's kind of how I work with you as a borrower, or how I would work with you, is I will send you what I call a soft term sheet. When you come to me and you say, I want to buy this, 10 unit in Olympia, Washington, they're asking $2.5 million for it. For example, you would send me the property address or the MLS listing information. I would then glean the information off that listing, and I would put it onto the spreadsheet. Then I send it to Janina or a different borrower, as the case might be, or lender, and they will compute all the closing costs and what, their fees and all that kind of stuff. And then I would send it back to you, and you could review everything, and you'll know everything, what your mortgage is going to be, your principal, interest, closing costs, all of that stuff will be spelled out for you. And then you just go ahead and sign it, and then submit it back to us. Oh, before I was going to also mention, I'm sorry, when you do contact me first, one of the documents I'm going to need to see is the purchase and sales agreement. Okay. If you're just looking at the property and you're thinking, well, I don't know yet, or for some odd reason, if you don't have a purchase and sales agreement, don't let that stop you either. But just know that I can do a lot more, a lot faster if I do have that purchase and sales agreement, right? Because now we're hot, we're live, and we're rolling. So, but if you're just looking at a property and you're not sure, you need some help with due diligence or property analysis, that's what I'm here for. And, I have uh, good professionals like Janina to help me out with that too if I need. But anyway, back to the procedure. So we would put together the soft term sheet, send it back to you. You look at it, you sign it, and then you submit it back to me, and I'll pass it on to Janina or the lender, whoever that might be. And then of course we're going to want your driver's license, and you can see the list of documents here on the screen. But I'm just going to go through each of these very quickly. Driver's license, yes, that is important. I know it's personal. I know people are sensitive about it, but let's face it, we need to know who you are, that you are who you really say you are. I had a pretty nerve-wracking experience here about a year and a half ago. I was doing notary. I was a mobile notary, and I went to do a refinance, signed some refinancing papers way over on the other side of the state of Washington. And the wife had an Oregon driver's license. And it was really interesting because they had her picture and looked like a normal driver's license on the front side. But then when I went to look at the back side, it was pretty much blank. And I was kind of nervous. As a notary, we had to take pictures of both the front and the back of the driver's license, the borrower's driver's license. And this, by the way, applies to you as well. So when you submit your driver's license, make sure you get both the front and the back side. But anyway, back to the Oregon driver's license, it was all blank. And I was a little nervous because I wasn't sure if this was a legitimate license. Most states, they have a whole bunch of stuff like a watermark or some kind of seal or something on the backside of it. So you would at least know. It looks legitimate, but this one was kind of plain and boring. And I'm like, I was kind of a little nervous there. But the title company escrow officer never said anything. So I guess we're good. So, but yes. Going once again, make sure that when you submit the driver's license, you have both the front side and the back side. Okay, enough on that. Let's go on to LLC documents. Yes, we want everything. We want the operating agreement. We want the articles of incorporation, your organization, your certificate of formation and filing, your EIN number, especially the EIN number. Okay, because even if you don't have the papers, your state operating agreements and stuff like that with the state, whichever state you're operating out of, with the EIN, we can do a little bit, at least get you started, keep you warm until you get those other documents so we can make it hot and continue rolling. You want a certificate of good standing. That basically means that you are current, that, we need to see that you're paid up with the state and in good standing through this year, through 2023, whenever. So like, for example, I have another company, I have another business that I just got a notice from the state of Washington here a week ago saying that my articles of incorporation and all that or meeting minutes have to be submitted by the end of next month. So that's a reminder that, I want to keep that current. So make sure your documents are all current. Also, Janina and I had a borrower here just recently, about a couple of weeks ago, and we went back and forth with this guy because his operating agreement was all Gucci gaja. It was just like, what is this? So basically, I'm going to make this really short, but just to give you an idea, just for educational purposes, this guy, he and his son were basically co-owners of a investment property. And what happened was about a year or two ago, he took his son sold his 50% back to his dad. His dad then claimed to be like an 80% owner of it, and his wife was the other 20%. Well, it showed the operating agreement showed the transaction where the son relinquished his 50% ownership, but there was nothing on the wife. And then just suddenly out of the blue, he says, "Oh no, my wife is on this agreement," and she was, but it didn't have any breakdown of the percentages. So it caused a real hassle for poor Rochelle, the underwriter, as she was trying to struggle to get this all put together. Um, and I've been told, I've never had this happen to me before, but he could have just gone to his attorney or CPA and just said, "Hey, fix this for me." And it would have been like 5 minutes and it would have been all good. So people, please, please make sure your operating agreements and everything with your LLC documents are all up to date, current, and accurate, because there's nothing worse than having to spend 2 or 3 weeks going back and forth and bickering about something that could be done in 5 minutes with just a phone call to your attorney or whoever formed your entity and get it corrected. Okay. So anyway, let that be a learning lesson. Let's make sure that all our LLC documents are current. And which you might have the question like, well, why do I need an entity? And I would say yes. I believe that Janina and her company and all lenders I know of will want to ensure that you have an entity. They do not loan money to you directly. Okay. And this, if you're a wholesaler, fix and flipper, that might be a little bit different. But I know that for Janina's firm, they do not. They require you to have an entity in place.
It's for your own
I'm trying to,
protection too.
yeah, I'm just
I
trying
think
to,
even most wholesalers and fix and flippers, they
right.
recommend that as well, just so, your own name. I know a lot of people even have multiple, they have so many properties under one LLC just to kind of separate some of the, kind of limits the risk. Just, you never know, just in case something would happen.
Right, exactly. That's a good point too, what Janina just said. But I was just trying to brainstorm and think of any lenders that would lend to individuals
Not
that
many
are doing fix and flip, but I can't, nobody comes to mind at the moment. So I would say, yeah, have an entity established anyway. It's for legal protection. It's for your protection, the protection of your property. And as you're building your empire, as you're acquiring more and more properties, I know that Anderson Business Advisors, I'm a client of theirs, and they tell me for each property you have to have a separate entity for each one. That because if you pool them all in one LLC, then anybody can go in there and penetrate that LLC and still sue you and come after you for all your properties. So yeah, you want to be diversified. You want to have entities for each property. Okay, let's continue on. So purchase contract, the HUD, the deed as applicable. So obviously you want to have your purchase and sales agreement at that time. We don't want to just start doing an application or processing and underwriting a loan if you don't have a purchase agreement. What's the point, right? And the deed is if you have currently own a property. This is more applicable towards a refinance. All right, 60-day bank statements. So why 60 days? Why not 30 days or 20 days? Or why not just something that we can just print out today and send to you? Why do you want to go back so far in history? If I could show you, if I were to print out my bank statements dated today, March 8, why would that not suffice? Even if providing, of course, I have the money. But Janina, why don't you comment on that?
Yeah, so there's a couple of reasons. One of course is just to prove your liquidity, just to see, what kind of funds you do have. And then also we look to see for reserves. So you want to make sure that you have, at least 6 months of reserves in your bank statements. So therefore, if something happens with a property or you lose a tenant, there's extra repairs, a lot of different things can happen. It just shows that you do have the funds. And again, we're not kind of setting you up for failure. If you've been overdrafting for the last few weeks and, now all of a sudden you have 10 grand, we want to make sure that, again, it's the right product, we're setting you up for success. So it just, it states a lot. And, the reserves is kind of the biggest factor for what they look at. A lot of people are worried about little transactions and what they're spending, their money on, or they don't want somebody to see. But those little, lenders aren't really paying attention to that at all. It's just more the kind of the big picture, and it tells a lot, 60.
Right.
So,
Right.
yeah.
Okay. Yeah. Good explanation there, Janina. Thanks. And I might also chime in there that 60 days, that's basically 2 months. That gives the lender a better picture of your history. As Janina said, you don't want to be overdrafting your bank accounts and taking out more money and then replacing it. If there's a history of unstable payments and, huge withdrawals and whatnot, it might scare a lender in thinking, oh man, what's going to happen? What if, we approve this guy and they go out and, he goes and buys himself a brand new truck tomorrow, right? While he's closing. And that has happened. When I was doing residential loans back in 2015, I actually had a guy that wanted to refinance his house. We got him better rates and terms, and we got the appraisal done. Everything went fine. Or no, I'm sure, sorry, not an appraisal, but anyway, I think he had an inspection done, and long story short, we approved him for the loan, and I think like a couple days before, he and his wife took off to Florida to go visit some relatives, and he didn't catch the statements to sign the documents, and so I think that the rate was locked, and then it became, obviously the time went past and it got unlocked, and so everything kind of went into confusion. And I'm like, hey, dude, where are you? We got to sign these statements. And so he signed it. We submitted it to Wells Fargo, but Wells Fargo denied it. They would not allow this refi. This has been what, 5-6 years or longer than that now, about 8 years ago. So I don't quite remember, but Wells Fargo did not release that mortgage statement. He had to refinance with them. So anyway, so they're looking, that's another thing that, lenders are looking at with bank statements, is they want to see some consistency and some history and make sure that there's no fraudulent transactions going on and whatnot. And that, as Janina had mentioned, that you are liquid, that you have the funds for the down payment and the 6 months of reserves. Okay, voided check. Basically, that's just your proof. That's just to give the lender information on how to withdraw the funds every month, make your mortgage payments electronically. Title company contact. Obviously, you want to make sure, if you're buying a property, especially, you want to make sure that you contact the title company, get title, get a clean title, make sure that there's no liens or any type of judgments or improper zoning for the property that you're trying to acquire. And this is, of course, what the title company is for. So make sure you get title insurance as well. We're going to need to have the contact information so that we can set you up for title insurance as well. The payoff contact, that's the same thing. If the seller or this property is under a mortgage currently, we're going to need to know who the current lender is so that we can pay them off. We'll have to have the payoff contract, which will basically show how much more is owed and how much longer this loan is going to go. Let's see here. That would basically be like a current mortgage statement, if I'm not mistaken here. And Janina, why don't you go ahead and kick in here and help explain the 6-month payment history with the payoff on the payoff contract.
Yeah, so whenever we request or, the payoff contact, we'll get the exact dollar amount that's owed. So then again, once the loan's closed, you don't have to worry about, the previous mortgage company, reaching out stating you owe a certain amount, or interest, accrued or anything like that. So we just want to be precise. And then with that, we also ask for 6-month payment history. And that kind of ties back to like the 60-day bank statements, but it just shows us that, you are in good standing and you have good habits of making sure that you do make your, current monthly payments on time. If it's like you're purchasing the home, we're not going to ask for the seller's payment history, but this is more so, if you own the home and it's already financed, we just want to make sure again that, you're paying those on time, because if we refinance it and there's, or I don't say sketchy history, but, kind of up and downs, we want to know why and make sure again, we're setting you up for success and not creating a bigger problem.
Mhm. Okay, good, good. Thanks for that explanation. All right, insurance agent contact.
Yep.
Yes,
So,
of course. That I think that's pretty much self-explanatory. Obviously, as an owner or buyer, you want to make sure that you have insurance on your property insurance, and also while I'm at it, ensure that your renters or your tenants also have renters insurance. Um, when I was in the military years ago, some of you who have had military experience, you might know that, the poop rolls downhill. That's how that an expression we had. So it starts from the top and rolls down to the bottom. So your tenants are on the bottom, you're next to the bottom. So you don't want the poop to stop on you and dump all over you. You actually want that to roll over to your tenants. Um, if a tenant, let's say there's this proverbial fire in the unit, and the unit needs to be gutted or whatever for whatever reason, the insurance company will most likely pay you out since you have property insurance. But I know they're going to probably want to go a little bit deeper and get to the tenant too, and find the tenant at fault and get money from them, or at least, and if they're insured, then they can collect from their insurance company rather than yours. So you want to ensure that all tenants, whether you're operating an office building or multifamily, whatever the case might be, always make sure that your tenants or renters have insurance as well. It's just better and stronger protection for you. Okay, the property insurance invoice. Of course, no lender in their right mind is going to close a loan, your loan, if you don't provide any insurance on the property. That's just a huge no-go. It's a huge red flag. Don't even give it a second thought. Provide the insurance invoice, okay? Make it easy for everybody and yourself. All right, next, last but not least is the lease agreement, okay, if applicable. Okay, so once again, if you're buying a property, uh, not so much if you're already renting, if this is a refinance, but this is mostly for a purchase. You want to make sure that the lease agreement is current. This is probably the biggest thing I can say on this, is make sure that the lease agreements, that the rent rolls are all current. Make sure they are completely documented, that everything is verifiable. Okay, so I'll give you a story here about back in 2017, I think it was around there. I had two real estate agents in Lake Charles, Louisiana. They had a client who owned two mobile home parks. I think one of the parks had 40 units, the other one had 35, something like that. And what the owner wanted to do is pull out some cash. He wanted a cash out refi so that he could buy a third mobile home park. Okay. So we asked them for the rent rolls, and the rent rolls were just incredible. It's just hard to believe that anybody, if these two guys claim to be real estate agents, which I don't think they were, but anyway, they came out with a spreadsheet that was numbered 1 through 40, and then they had no names of any of the tenants. Uh then they just had $400 for each unit all the way down the spreadsheet. So there was no records of deposit. There was no, like, I don't know if they had pet fees or anything like that, but none of that extra miscellaneous stuff was on the application, on this rent roll. And it was dated. I mean, it was dated the same day that we asked for the rent roll. So obviously, and all I had was the name of the mobile home park, and I think it had the address on it. That was pretty much it. And then they just submitted, because these guys were in a hurry. They wanted to close like within a week because they needed the money really bad. So anyway, needless to say, we contacted them and said, look, you know, this is not an acceptable rent roll. We can't verify any of this information. You have to go hire an accountant to put something together. So I guess they did. I think they spent several $100s, got an accountant or CPA to put some stuff together and sent it over to us. So then we proceeded to close, underwrite the loan, and we're just about ready to get to closing. And we're like, okay, dude, you know, where's your down payment money? And he said, well, we'll have it to you in a couple days. The underwriter was really, really clever. Um, I don't know if it was a man or a woman, but he or she caught something really big, and that is the owner of these two mobile home parks had sold both parks in order to come up with the cash to buy this third park. Well, please understand that these two mobile homes were the collateral. And so long story short, they committed mortgage fraud. So we never did their loan. And the thing is, the guy that I was working with over in Happy Valley, Oregon, he was another loan broker. We were co-brokering together. He and his dad who have been in the business for quite a while, they charged the borrower a $2,500 upfront fee, engagement fee, to continue moving it. So at least they got paid, you know, they got compensated a little bit for their time and effort. But the borrower, I mean, just dumped in crap. I mean, I don't know. It was just an ugly ending. So anyway, you want to make sure that the lease agreements are current, okay, and they're accurate and they're verifiable. Enough said on that, okay? So, you know, don't play with fire, don't mess around with this. And I guess another thing that comes to mind really quick is a lot of sellers and the listing brokers they'll provide you with what is called a pro forma statement. Now, those of you who have done some investing, you know what a pro forma is. It's just a prediction of what all these expenses and what the rent rolls or the rental income will be, say, down the road. And a lot of the sellers, it amazes me, even on the MLS websites or the broker's website, they'll say, yeah, we're getting $1,300 a month for this unit, but if you raise it up to 1,500, it'll be very easy to get. You can get 1,500, and then, you know, that will support our cap rate of, you know, 5.5%. It's like, come on, people, seriously. I mean, you have to be pretty gullible or ignorant or stupid to fall for something like that, right? Because basically what they're saying is they want top dollar for the property, but they expect you to increase the rents and be the bad guy, to tell the tenants, hey, your rent's going up, and for you to deal with all of the stuff that they didn't do when they were owners of the property. So if you get a pro forma or you see a property listed for, you know, X amount of dollars, but there's a statement saying that you can raise the rents and come up to their numbers, I would say no way. You either you raise the rents and stabilize the property at that rent, or you take a lower price for the property. And of course, guys like me, I've done over 530 property analysis on different various properties. So if you need any help with that, you have any questions, feel free to ask me. I love this stuff. I'm very anxious to rip into properties and tear them apart and find all that crap. And that will help you, because then we can negotiate a lower price. Okay. So just get help. Okay. Just contact me. All right. Enough of my tirade. Let's move on. Okay. So now we're going to just briefly talk about ground up construction and bridge loans and how they all relate and tie in together. And I'm going to take a break here with my voice and let Janina explain this to you, please.
No, you're fine. Yeah, so for ground up construction and bridge loans that need renovations or rehab, there are just a few more documents that are needed compared to just like our general, 30-year loan, DSCR products, or a bridge loan that doesn't need rehab. So again, when there's construction or renovations needed, we want to make sure that you have the experience. And again, we're setting you up for success. So, if you buy a property for $100,000 and you're wanting to put 2 or 300,000 in, that's a very big project. And we want to make sure that, you have the experience and, you're not kind of stepping into something that you've never done before and, kind of just spirals from there. So the first item is the experience tracker. Most lenders will have a template, but it's very easy to create on your own as well. Usually it's just an Excel spreadsheet with just all the details on what properties you've completed, if you sold it, how much you purchased it for, if rehab or construction was done, how much that was, and just as much detail as you can provide, sales date, all of that. And then again, that just kind of shows, where you stand, how much experience you have, to date. The next item is the sale HUDs, and kind of like school, you have to show your work. So that's just proof of those completed deals that you listed on your experience tracker. And again, that just, we can't just go with what you stated. A lot of times, somebody will say, oh, I've completed 10 deals, when really it's their, brother, and they might have helped them or, walked through, but they have no proof that they actually, completed it. So the sale HUDs will provide proof of that. The next item is the scope of work. And this is, again, something that you can create on your own. Most lenders do have a template as well, that you would need, to submit the loan, but you can always start it on your own Excel spreadsheet. And it's just breaking down line for line what work's going to be completed, either on the ground up construction or on the renovation for the bridge loans. So if you're adding, new countertops, you're buying supplies, new toilets, lights, flooring, all the details, landscaping, a fence, every single item, you'll put that on there, tally up the amount. And again, this is for accuracy as well. So that you're, within budget, and we can see the breakdown of what those renovation funds or construction funds will be used for. And most lenders have draws where you draw that money out, and that's another way that they're able to keep up with what work has been done. So when the property's inspected, they can actually kind of, cross off each item and account for those funds that have been spent so far. And the next two items are specs and plans and permits. So anytime square footage is added to a property, you'll need to provide permits from the city and specs and plans. The permits, that's just to ensure that the property can actually, the city's approving it. So I've had a lot of clients that they're adding an extra bedroom or even turning the attic, into livable space. And when it comes down to it, then the city doesn't approve it. So you don't want to start something, and we definitely don't want to either, provide funds for something that you can't have anyways. So that's, again, just kind of dotting all your I's, crossing your T's, and we want to help you with that. And then the specs and plans is just a breakdown, kind of the blueprint, exact details of what exactly you're going to be doing and adding to that property.
Okay, yeah, thanks for the explanation. I do have one question though.
Yeah.
Going back to the experience tracker, what if somebody doesn't have experience?
That's fine too. We do a lot of bridge loans with renovations for brand new investors, but you want to make sure that we always recommend that the first projects are more simple, easy, where, you might buy a property for 100 or even a couple 100,000, and you're only putting, 50, 75,000 into it. You're not putting more renovations in than the property's even worth. So, yeah, it's not a no-go. That's something that you won't have to provide then HUDs or the experience tracker if you're completely new. But, that just lets us know kind of where you stand. And again, making sure, you're not buying we get a lot of times a client, hey, I got this $300,000 property and I'm going to put 500,000 into it and it's going to be worth 2 million. And there's kind of nothing to support that. And, if you're experienced, you might have more explanation of why that would work or et cetera. But, for a new investor, you just want to kind of build your way up, and we want to make sure that you're successful.
Right. Okay. So if there's any of you listening in on this and you're thinking, well, I have no experience with ground up construction, right? This is more for the big boys. However, I think Janina will agree with me. This is kind of just top of the head thinking here. But if you have no experience, but you want to develop a property and build something, I think the best thing to do is team up with somebody who has experience and work out a deal with them. That's kind of what I'm also planning to do with some developers up in Anchorage, Alaska, because I have no building experience. I don't know Anchorage that well. I just love it there. And from what I've been following up there, this might be a good opportunity for me to team up with some people and say, hey, look, if you can build, help me with the permits, the plans and scope of work and all that, I can help you get the financing and we can work together and do business together. So that might be another opportunity, or at least a thought that came to my mind that might help some of you who are interested in new construction but have no experience. That would
Yeah.
be the best route to go, is team up with someone that has the experience.
Yeah, ground up construction is a little bit hard, where they do require experience. Bridge loans, rehab, new investors. I probably should have kind of separated those two. So yeah, just basic bridge loans with renovations and rehab. New investors, can do that by themselves, but I'd still would recommend having, a mentor, someone to kind of help guide. But ground up construction is, a lot more to it. So,
Oh, yes.
yeah, definitely
Right.
need someone
Yeah,
experienced.
exactly. Yeah, you don't want to do new construction on your own. Real estate investing is a team sport, right? I mean, even if you are even if you're, say, for example, just a single borrower and you're just an individual that wants to go and buy a 10-unit apartment complex, well, you're going to need a lender. You'd be smart to have a broker, an experienced commercial real estate broker, to help you look at the property. You're going to need to get an inspection. You should at least have an inspection on it. If not, well, lenders will require a full appraisal as well. You have to have your title officers, your escrow officers, your closing attorneys or whatever, your processors, underwriters, you know, loan officers. I mean, you're looking at a team of about 8 to 10 people already. So you it's the same thing. It's even more important, more critical with new construction as well. So you want to go with a developer who's built several homes, not just one or two. You want to make sure that they have experience and know what they're doing. Okay, let's move on here. Okay, so I guess that's pretty much it for today you know, for this topic. Just in closing, if you have any questions, go ahead and type it into the chat box right now. Just very quickly, uh, as mentioned, I do commercial loan origination. I have 3 different programs for you. One is the bronze program, which is basically how you normally do a loan application when you're seeking financing for a property. You contact me, and then we just start a dialogue and we start calling for documents and all that kind of stuff. And it's just free, and you work on your own speed and time. The silver program is a $2,500 one-time engagement fee. This is basically to get us married together on the deal. Once we have established a relationship, then I'll never charge that again. In fact, and when we do close, I'll actually deduct it from the original loan points at closing, providing that it is $2,500 or over. One thing I know people have a big issue with this about scammers, people collecting upfront fees. I totally get that. I'm not a scammer. So I will let you deposit the $2,500 with an escrow company of your choice. So all you do is contact your escrow officer, tell them, him or her, what you want to do, and then have them contact me or provide me with their information, and I'll contact them. I'll work this out with them to make sure that your funds are secured, that I don't get my grubby hands on it until we close. Okay. If for some odd reason I cannot find you a lender within 60 days of the deposit, then I'll just refund you the money. Maybe your loan is too difficult, or it's just doesn't quite, I can't find anybody that will take it. And it does happen. I'll gladly give you the refund, refund you the money, the $2,500. We're going to do this with 60 days because I'm going to hold your feet to the fire too a little bit. So I don't want to waste time. Don't waste my time, please. Don't waste your time. Make sure you have a property. Make sure you have all the documents that we just discussed ready to roll. And boom, I'll send it. If they're accurate, they're verifiable, and there is no Mickey Mouse stuff, none of the scammer BS stuff, and we can get you to closing, then great, wonderful. All right. But if you submit documents that are not correct and 60 days lapse and I'm still fighting for you to get an accurate updated credit report, well, I'm going to keep the 2,500. Okay. That's for my time and effort, because trust me, when you work with me, I will bend over backwards for you. Janina and we worked with one client here a couple weeks ago, and I was just sorting through the emails last night. We had over 150 emails going back and forth on this one client and all his little hangups, so to speak. Okay, so we want to try to we'd rather prefer to do maybe 30 emails at maximum. Okay, and if you have your act together, if you have your stuff together, trust me, it goes much faster. You've heard lenders say we can close in as little as 5 days. Well, it's possible, but that once again depends on how fast you can provide all these documents in an accurate manner, accurate and timely manner, and make sure that the underwriter has no questions. You got to take care of all those little issues and questions. And then, of course, last but not least, is the gold program. That's a $5,000 engagement fee. This is basically for life. It's just a one-time fee. Of course, it's just like the silver program. When we close a deal, I'll reduce the 5,000 from your the 1 point that I usually charge. If there's still some left over, like if you get a $200,000 property and my 1 point is say $2,000, then I'll apply the 3,000 on the next deal or the next deal or the next deal until it's gone. Okay. I'll just deduct it from the points from my loan origination fee. So anyway, same as the silver program, you deposit the money into escrow. We make the connections, and this time you can provide the documents you can take as long as you want. You can take 1 year if you want, but knowing you as an investor, I hope that you would be a little bit more fast and prompt on it, because believe me, if you have a really good deal, somebody else is going to snatch it from you. So just make sure that you're ready to roll. Okay. And the gold program will, once again, again, I've had a lot of people circumvent on me and, shop their deals around with other lenders and go with other lenders after I've done all this work for them. So this is pretty much why I'm charging the fee. I don't necessarily, I'm the kind of person, I want to earn my money. I don't necessarily want you. It's not necessarily that I'm so anxious and excited to get an upfront fee, but I just do this for my own protection, because I'm sorry, folks, I'm a nice guy, but I don't work for free. I'm sorry, I just can't. I've got a wife and 2 kids to support, and it just doesn't make any sense. And if you're honest with yourself, you would not want to work the same. You don't want to do that either. So again, I don't want to go on and beat this to death, but that's basically the purpose for the fee. Okay. And once again, I'm so easygoing. If you don't like any of this, fine. We can stick with the bronze program. Just take your time, do what you want. It's fine with me. Okay. Let's see here. Well, that's enough on that. So I'll move on. Here's my contact information. I'll leave this up here for a few seconds so you can take a look at it. I do have a YouTube channel. I would like to invite you to check that out. I've got probably around a dozen videos, very short, 3 to 5 minutes long in length, plus all these recordings that we're doing here will also be on this channel. My mobile phone number, excuse me, is on the screen. You can call me. I do screen calls. I get a lot of calls from salespeople trying to sell me stuff. So if I don't answer the phone right away, please leave me a message. At least leave me your name and say something like seeking funding or whatever, and I'll call you back. But if you don't leave me a message, I'll probably block you. Okay, just to let you know. All right, yeah, I'm just that serious about it. Okay, yeah. So in closing, I just want to say thank you for joining us. Our next webinar is scheduled for next week, Wednesday, March 15th, but I just realized that I have an eye doctor's appointment, so I may have to change that time. I'll provide you with some updates here as soon as I can within the next 24 hours. All right. Thank you so much. Janina, did you have anything to say
No,
in closing?
no, thank you for having me, and yeah.
Yeah, you're welcome. Very good. All right. Take care, everyone. Have a good day.
Bye.